Hi, this is Randy Finney with the right side of the chart, and today is Thursday, February 2nd, 2017. Probably should call this video Thursday. This is video number 3, actually 4. I scrapped the first one today, it was too long. I wanted to break it down into individual sectors or the broad markets, which I've done so far. So this is video number 3. We're going to cover the gold, mining stocks, gold, silver, platinum, precious metals, and then I'll either follow up with a couple other videos or written post on things such as wheat, the grains that I wanted to cover, the ag commodities, as well as some trade ideas that stand out right now, individual trade ideas. So let's start out with gold. And before we get too deep into the charts of gold, let's take a look at the U.S. dollar, and then we'll get into gold and the precious metals. As I often state, any analysis in gold, in my opinion, without taking a look at where the dollar is likely heading, is not complete. As gold and the dollar typically, not always, but typically have a fairly strong inverse correlation, meaning one goes up, the other goes down. When the dollar falls, gold tends to rise. We need to try to look at the charts of the dollar. Right now I have the dollar ETF UUP up, and to help us determine where the next direction in gold might be, or at least what I like to say, either affirm or refute my analysis on gold. In this case, so far it has been affirming it. If you recall, I did a video just what was it, last week, if I remember correctly, and I stated at the time UUP had fallen to this gap. You see the red candle there, and it said as my expectation, the initial tags of a gap from above, this is the top, what I'm referring to here if I'm moving too fast, is this gap right here, big old gap back in November. And as I often say, the initial tag of a gap from above is often followed by a reaction, a bounce, which is what we got. It was a relatively muted reaction, and I believe I went on to state that I expected that gap to ultimately be backfilled. And that is what has happened. You can see once we moved into the gap, see we bounced up for about 3 or 4 days, then gap down to within the gap, and from that point you can see the gap has now been backfilled, or essentially very close to being backfilled. I'm talking the bottom of the gap. So what happens from now? Well, if this is the initial tag, or if there's a little more downside left in the dollar to actually make a full-blown tag, again, if you want to split hairs, I can put the crosshairs on it, tell you the low today was 25.65, and the bottom of that gap high was 25.62. So close enough for government work. There's 3 cents within the top of the gap. Maybe it wants to flirt with it for a few days, but odds are a little reaction, a little bounce off this initial backfill of the gap, and or if prices move a little lower in the next day or two, we could bounce and maybe move back up to the top of the gap, maybe even go all the way back up here and fill this gap. You can see the gap that occurred just about 4 days ago on Friday's gap down. So that's where we're at, and I guess what I'm trying to say is my near-term take on the dollar is a little uncertain. Over time, I do favor more downside in the dollar, which would be bullish for gold. I think once this gap support goes, which, by the way, it's not only gap support. There is the gap there that I mentioned. There's also a reaction from below here. There's a reaction there. There's another gap back here. You can make that out. Gap back here. Reactions from above. So this level, let me mark it for you, is a pretty significant level in UUP. We'll take a look at the dollar index, which will be similar in a minute. One potential scenario here, and again, my conviction isn't super strong at this time. Maybe we want to put in a right shoulder here on a head and shoulders topping pattern and then move down. So in that case, this would be your neckline. This would be over here your left shoulder. Here's your head. Potential right shoulder. It would also come in and back test that uptrend line that I'm talking about there. And this is a downsloping neckline, which is perfectly normal. In fact, even more bearish when you have a downsloping neckline than a flat or horizontal neckline. A break of that might come in as well with a break of this 25.64 support level, depending on when we get there. So there's one possible scenario, and that would make for a lasting top in the dollar. Head and shoulders are pretty powerful topping / reversal pattern. So there's one take. We'll look at DXYO. I haven't even marked this chart up yet. This is the dollar index. So there you can see it as well. We draw it out here. Let me give you a clean board on DXYO. There we go. It's a clean board. show you the potential head and shoulders pattern. If we get that right shoulder, there'd be your neckline. You can draw it either way. Maybe you cut it right here and it's horizontal with that little peak there. So either way, you kind of get the gist of it. So that's something to look out for. Now, if this does play out and we get a bounce in the dollar, that would be near-term bearish for gold. So my opinion, I'm still somewhat neutral. For those of you who recall in the video I did a week, or actually I did another one a couple weeks back, the day that gold hit. Now I've jumped over to a daily chart of GLD. The day gold hit this 115.70 level is when I sold out of my gold mining stocks that I was long from the breakout here. And I stated that I had absolutely no desire to short the miners. Very often when I expect a pullback, and I did expect one, I just didn't know how shallow or long it would last. And you can see we've sort of been consolidating. We've had numerous attempts at that 115.70 level, you know, some intraday breaks above, and even that day when we hit it, we were hair above it. But we've yet to take it out with conviction. Today we've had the highest move above it if you look at this. But so far we've come back in a little bit. Volume is not impressive. If you can make out these volume bars here as I'm doing this video, it's 3:22 Eastern time as I speak, so there's a little more than a half hour trading left in the day, and you can just eyeball and tell you that eyeball this and say that at best this is average volume. We're not above average volume. So this breakout is a little suspect. Could prove to be the real deal. 115.70, give or take, should act as support now that that level's been taken out. So let's see if this can hold in the next few days and gold can continue to power up. But I suspect with everything I just mentioned on the dollar, that gold may need to work off or at least consolidate or have another pullback before it takes that level and continues on up here to my next target zone, which would be these two lines. Again, my conviction is not strong enough to go either long or short. In trading, you know, I find a rule of thumb I like to use is less is more. Don't force your trades. Wait for the clearly objective, higher probability entries. Over trading is a quick way to really, you know, eventually lose money. So if you can be very selective on your trades and learn patience, sit on the sideline. I might miss this next move up in gold. That's possible, but I'd rather do that than force a trade that I'm not 100% comfortable with, at least at this time. 60-minute chart on gold. I shared this recently. We had a divergent high here, negative divergence. I have two alternate trend lines. Either way, there's those divergences. They did play out for a little correction. We've pushed back up, and again, we're barely above those highs. So this, to me, although technically it's a breakout, we've taken out those previous reaction highs, which we were also looking at on the daily chart, but only by a very small amount and without any conviction. That's why I question the validity of this breakout. It's not confirmed on above average volume or an impulsive candlestick, impulsive move up. So there's a minor trend line to watch now. And if you look at it this way, actually, guys, something I just noticed, I can extend these divergences. So this new high, this marginal new high today in gold on this 60-minute time frame, only put in another divergent high. Just one other reason that I'm, you know, suspect. Just as I was bullish back here with the divergent low, then when the trend line was broken, that was where our buy signal was, and now we have a divergent high. Trend indicators are whipping around recently, but either way, that's my thoughts on gold. So I'm going to sit back and watch and see what shakes out here in the coming sessions. GDX, the gold miners, look good. In fact, they've been moving up. They broke out above this downtrend line, which was bullish. They consolidated a little bit around this T1 zone, and then they moved up and almost to the penny hit this. I had this resistance level here right at $25 even, and it looks like that was a high of $24.99, so within a penny. We hit that level, so far have stalled. And remember, I always say this, the miners will ultimately follow the metals. So just like I like to keep an eye on the U.S. dollar and to confirm or refute my analysis for gold, I also most importantly need to confirm. You need to confirm any move or setup in gold in the miners and GDX with the charts of both gold and silver, because remember, a lot of the mining stocks within GDX are actually silver miners as well, or they pull both metals out of the ground. So I'll get to silver here in a second. Either way, there it is. We're not extremely overbought, so there's certainly room for the miners to run up more, especially if gold breaks out, and that breakout today sticks and we build on it. But there's a resistance zone just overhead. And again, let's go down to the 60-minute chart here, and here's the story. Just like we had a divergent low here, which was a good time to get long at the divergent low, or at least on that breakout in gold, or we had this level here. You can see it was actually at the time resistance, then I since labeled it support. That was a breakout, but off the bottom, the gold mining stocks rallied throughout the highs the other day, about 35%. So they got a little stretched. We have a divergent high. It's about equal in scope to the previous divergent low. So although I think that the primary trend now, I think we're in the early stages of an uptrend. I think the correction is over in gold. A little too early to say. However, these divergences give me pause, and this is why I am not currently long the miners, nor do I care to be. I should clarify that statement. Long-term accounts, I do have positions in GDX and the miners. Trading account, I'm flat. So, I wear both hats. I'm an investor and a trader. Investor, I don't always try to game all the little micro rips and dips, but as a swing trader, that's what we do. So there it is. Let's watch and see what happens with gold and GDX, but there's a divergent high, and unless that's taken out, meaning maybe the PPO moves up beyond that previous reaction high, as does the RSI and everything else, and these divergences are then negated or taken out. There's a resistance level here that gets taken out. That might do the trick. And then the technical outlook for GDX changes. Now let's look at silver. Let's go to a daily chart since I don't have anything marked up there. Silver looked good. It was, just like gold, GDX, I gave a support or buy zone. Silver went right into that support buy zone, so you could have scaled in there. That was my preferred strategy. And then we had a downtrend line, a bullish falling wedge, confirmed with bullish divergences. It was taken out. Boom, boom, boom. Both targets hit. We're sort of in no man's land right now on silver. By no man's land, that's what I refer to a stock or a commodity or ETF, whatever, when it's between support and resistance. And we're smack in the middle. I don't see a lot of support anywhere around here. So we're sort of just hanging there. And it's hard to say whether silver continues up to this resistance level here, which is at around $17, or if we come back in down here to, I can move this line up a little now at this point. I think it's more accurate there, around 16.35 or so. So that's silver. You could also draw a trend line to watch if you are long the metal. Tough to draw it. I'm not sure if I would use this line here. There's more reactions right here. Yeah, let's just leave that off for now. I don't have a high degree of confidence in that line. Okay, and the other shiny metal, precious metal, that is platinum. Stated, I think it was in December, just before the end of December, early January, just before the new year kicked off, that platinum was one of my favorites of the precious metals. Had a very clean, nice bullish falling wedge with sharp divergences, very steep divergences, falling right down to support. I mean, it doesn't get any better than this in trading. That bullish falling wedge, it broke out. It gapped up. It didn't provide an objective entry. But it did play out, and it built on those gains, hit that first target right away, came back, tested it, which then T1 becomes former resistance, becomes support, and from there it moved up, and it's just shy of that second target right now. So my guess, best guess, again, I'm not sold on this scenario, but maybe a little pullback, a little more time, and then power on up, take out T2 and move up to this T3 third target level in platinum. Okay, I think that does it. So let's just keep this one short. We're right at the 14-minute mark. I covered the three metals, precious metals, and GDX, the miners. So there's my thoughts. Again, my opinions aren't very strong. Longer term, I still think these charts are constructive. Sometimes when you think of pullbacks coming in the metals and the miners, it can just keep going. Again, there's a lot of variables in play here, including the US dollar. So watch those levels. And in trading, the more more buy or sell signals you can put in your favor, meaning the dollar breaks, let's say the dollar breaks below that gap support that I mentioned in the beginning of the video, looks to be headed lower. Gold holds this breakout that it slightly took out today. We build on today's gains. And those divergences are taken out in GDX, then you have a higher degree of confidence that the metals are moving higher. Until then, it just may be one of those sideways grinding, frustrating trades for at least another week or two, but we'll see. I'll keep you updated. Okay, this has been Randy Finney with the right side of the chart. I hope you enjoyed it.